Hey guys, so in this video, I'm going to show you what I've showed my Academy students, how to actually conduct a top-down analysis. If you're brand new to trading, a top-down analysis simply means that you start from the higher time frame to get the overall picture of the structure of the stock or whatever you're trading, and you drill all the way down for a precise entry. Now, I'm going to be analyzing three stocks, but the last one is where I really drill on to where I need to enter a bullseye sniper entry based on my top-down analysis. So you want to watch it from beginning to end. And although I don't completely do a top-down analysis for the first two stocks, you'll see why I didn't and how I gradually did a top-down analysis for the last stock. So you're in for a treat. Let's go ahead and get it. As far as Coca-Cola, definitely at a supply level. I already entered my short sale. I dropped it in the stocks room as well. Depends on where you want to exit. If you're short selling, is completely up to you. I do believe that we could be possibly in a downtrend, mainly due to the tariffs. But what I'm looking at on the left side here, back in 2024 of September, price rejected off of the supply level, and then it's been in a downtrend on the daily from that point on, kind of given a neck area right here, and then came back up and retested in March, and it looks like buyers want to push it higher but couldn't, possibly mainly due to the tariffs in place. But it started to increase just a bit here. So now we're stuck at this level. This is the highest Coca-Cola has ever been. So I don't think it's going to shoot above it, mainly due to the tariffs. I think in normal circumstances it possibly can, but I don't want to stick around too long in this short sale if you decide to do so. Where I'm personally anticipating is a couple different places depending on the volatility, because I don't want to be in this trade for too long with all of the high impact news. So what I'm doing is looking left for clues, and I'm looking at this level here. I think this will easily get to this level right here around the $70 mark. So anywhere between $71 to $70 mark. Looking left here, this is where it consolidated a bit. So it looks like buyers and sellers were negotiating, and it was kind of like a consolidation here from supply or resistance to support before it broke to the downside, right? Again, this is a very key level. So I think you can easily make some money here. It already started dropping if you didn't get in. So one or two things you can do is wait to see if it'll come back and retest, which it can be. We still have a little bit of time in the New York session, possibly even tomorrow. The risk of that is that you may miss the trade and it can come down. So I'll leave that up to you, just as long as you're risking no more than 2% of your account. So I may have several take profits, one around the $71 to $70 mark, where I may take partial profits. And then depending on the volatility and what I see after that in tariffs and news, I can take it down to around the 60, this neckline here. So around $68. I would say the safe is around $69. So I'm going to make a note to myself with that and close complete profits, depending on volatility, guys. Again, I don't want to stay in this for too long. And that's just me personally as a swing trader and what's going on with the news. Also, I want to make note that April 29th, they have an earnings report. So you also want to take note of that as well. Sometimes people don't want to stay in the trade when the earnings report hit. It could help you, it could hurt you, depending. It starts off with a gap, depending on the results. So may want to do some research on that and exit prior to that if you decide to take the trade. All right. So again, that's short selling for Coca-Cola at a beautiful supply level, which was a previous B swing level. And if I look past that, price has never been in this zone here. So we may see some rejection for quite a while, right? Similar to this here when we've seen this previous supply level around this zone right here, right? And this took months and months and months for it to drop before it finally broke at this level here. So that's what we're dealing with here from August 2022, December 2022, tested again May 2023, and it finally broke July 2024. So we're looking at something like that here. So I'm just not going to stay in for too long, depending on the results of the tariffs. Although with tariffs and typically with American stocks, American companies, we may see some continual downside. But I was looking at American Airlines, very, very cheap compared to a lot of big name companies. Currently, it's trading at $9.82. Always start on the higher time frame, guys, to give me a bigger picture of where I'm at amongst the crowd of candles, if that makes sense. And it gives me a good indication, right? So this will qualify for a B swing. So even if this would have qualified as testing our demand level right here, this was back in August of 2024, which still qualifies as a B swing. Remember, 6 months or more qualifies as a B swing. But because this is a demand level, what I like to look for when I'm trading a B swing, or if I'm finding a supply or demand level, is just this big imbalance here, this big gap between from when price was at it prior to when price is currently at it. And that gives me a good indication that sellers have exhausted. Looking at this strong wick rejection here, red wick rejection, price buyer start to pull it up, came back down, and now it looks like it began to kind of gap up when it started. So let me go to the daily time frame to look at get a better picture here. All right, so if you're only looking to maybe swing trade for a couple days from where price is currently at, and I would say around this level here will be perfect. So currently price is at $9.83. So I would say maybe 1058, maybe a good dollar, right? So 982 to about 1082. So anywhere between here, I'm also looking at this peak here that was on the 9th of April. So anywhere within this zone, again, it depends on the volatility and where you personally want to get out and how many shares you're purchasing, what your risk look like according to your balance. So risk and stop loss and take profit looks different to everybody based on those criterias. So sometimes I can tell you what my take profit is and what my stop loss is, but it may be completely different than yours because your account balance may be more than mine or less than mine. Which means that your risk management of 2% or 3%, whatever you're risking, is going to look different than mine. So I never really try to give too much of a hard stop loss or hard TP. I only suggest mines. I can give you some pointers where to stay away from, such as stay away from structures. So as far as stop loss, maybe look at a previous higher low or higher high to determine to take profit, which is a good indication of where you should get in. If you're trading the price action channel strategy, for example, you can get out TP in the middle of the channel. So there's different things in place that we provide you to figure out a take profit and a stop loss. Okay, starting on higher time frame. And guys, we'll talk about scalping. I know some of you guys scalp and intraday trade too. Just because I'm going to the higher time frame doesn't mean that I'm swing trading all the time, right? The whole reason why I'm going to the higher time frame is to first see where my levels are. I want to find my levels. Once I identify my levels, and let's say price is currently near my level, then I'm going to shoot down to the lower time frame because I want to see if it's oversold on the lower time frame as well. That will give me a pinpoint entry when to start my buy. And vice versa, when price is at the peak at a supply level, I want to find my levels overall. So for example, let's do this. I notice that this is a level here. Price is near my level, just above it. It could go further down or it can start to reject and go higher. But I'm overall on the weekly time frame, I spotted a beautiful demand level. Okay, price isn't currently there, but this gives me pretty much probable cause that price is going to reverse and possibly start an uptrend or at least give us a nice rejection. Because I had that probable cause, I'm not going to just execute on the weekly. I'm going to start drilling down to pinpoint my entry. Right? So I'm on the daily time frame. I'll start to spread out. Now that I know that I'm in a downtrend, I can start going down to see what my eyes want to see. Okay. So I can go down. So now that I'm on a 2-hour time frame, for example, although price isn't in my preferred zone, this is where I preferably want to buy. But you can see that I start to drill down, and this is for scalping, maybe intraday trading, maybe even swing trading for a day or two, where you start to kind of find these patterns of consolidation, right? So in a trend, a downtrend, we have lower highs and lower lows. But within these lower highs and lower lows, we have small bits of consolidation typically on the lower time frame. And you see something like this on the lower time frame before it starts to drop further. And that's exactly what we're seeing here. So we're in a downtrend, but then there's always some sort of consolidation or where buyers and sellers are determining their price, right? So you'll start to see that, and you'll start to see it even more as you zoom in. So for example, before I even zoomed in, this just looks like a downtrend. And I'll draw it so your eyes can see it. This is just a downtrend. But as you zoom in and spread your chart out, this is highly important. And then even start going to like the hour time frame or the 15-minute, depending on what you're trying to trade, you'll start to see things like this within that downtrend. Let me clone it. Let me get my resistance level here. And not only that, if you go even further, now that if I'm looking to scalp, let's say that I notice that support and resistance zone. Let's see if I can find it again. I noticed the support and resistance zone. Now I'm on the 15-minute time frame. I see that price is at my support. This is the more dangerous part when you're in a downtrend, especially if you're not at a demand level, because now you may start to break through. But you can start trading levels like this, For example, you know you're in a downtrend on the higher time frame. Dangerous part right here because it can break through. But once you start seeing it come back up to this minor resistance level, because I drew my line right here. Remember price action, you'll see this on every time frame, just depending on how far you drill down. Another resistance level, odds are price is going to shoot down because I know I'm in a downtrend overall. Shoot down because I know I'm in a downtrend. I know I'm in a downtrend. This is selling opportunity, right? Didn't quite reach here, but this would have been a selling opportunity, right? Now that we're here, this is the dangerous area because we know that we're in a downtrend. We just don't know if it's going to break further down. In this case, it didn't. You will sell here. And since I'm on the 15-minute time frame, you're only scalping or you're intraday trading. Each candle represents 15 minutes, depending on how long you want to be in. This is typically where you want to buy, but it's more riskier because you're in a downtrend overall. I wouldn't see all of this unless I seen the bigger picture first. Here's the bigger picture really quickly. And let me auto fit. Okay. So here's the bigger picture. I found all of that within this little zone here that you can't see on the weekly time frame. And the reason why my bias was to sell within that mini consolidation that I found in here was because the big picture told me I'm in a downtrend. Okay. Now that I am ending a downtrend because I found on my bigger picture that I'm at a support level, at a demand level, and not just any support level, I'm at a demand level where odds are reversals are strong. And the reason why we got to this reversal area or this demand level quickly because of the tariffs, everything started to drop. Now that I know that I'm close, now I can go ahead and start to drill down again to see if I see some more consolidation. And now that I see more consolidation, I want to sell at my resistance level. But sometimes you don't know this is a resistance level until it touches multiple times. So 1, 2, 3. Usually the third time would have told me, okay, this is a solid resistance level on the 4 hour. So if it comes down and come back up, I'm selling here. Comes down, come back up, I'm selling here. I'm not buying because I'm still in a downtrend overall. It just so happens price reject it and start to climb up. So price is coming down again. This is the risky area. It could come back up to resistance, but it's risky because I know that this is my primary reversal zone. This will become my new support and resistance level here, but I'm only buying now. Now that you can see I changed my bias from selling to buying because of where I'm at on the higher time frame. So that being said, Nike is currently is consolidating on the 4 hour and lower time frame. Here's the 2 hour time frame consolidating, but it's risky because I'm at a support and a downtrend, but it's nearing my overall demand level, which is here. So this is where I would love to take my buy at, and I would love to sell up here if it happens to come back up here. So let's say this is how I would do my alert, for example. I would do click right, hit add alert, custom name. I'm going to put NKE for Nike. And I can say possible sell. And then I can say intraday, whatever. Well, I can put that in a note. So possible sell. And then in the message, I can say consolidation on the 4 hour or 2 hour and sell only, whatever your notes, whatever you understand, that's you're going to make those notes specifically to you. Sell in the 2 hour, and I will say nearing a weekly demand level. So whatever I need to know for when my alert pops up on my phone or my computer, that's what I'm going to type in the message. I'm going to hit create. So now this is my sell alert here, just in case it comes back and retest. That would be perfect. You can see that each 2 hours it came here, it dropped and sold. And more likely it will do the same thing until it gets further into our dominant demand level. And then at this point, I'm going to put right click, add alert, Nike at demand level. Let's just put weekly demand level. And I'm going to put buy Nike. So the reason why I'm saying buy Nike is because I'm more confident in doing so. The only reason why I'm not going to do a buy limit is because of the tariffs and the things, and anything Donald Trump says can completely obliterate that. In normal market, this would absolutely be a perfect B swing buy. Okay. So you see how I drilled it down for top down analysis? This is my scalping slash intraday. This is my whatever I want it to be. This could be a swing trade. This could be a scalp. This could be intraday, but this will be a buy level to the upside depending on how long you want to stay in the trade. All right, let's go back to the weekly time frame. And so you can see how I utilize all of my alerts to make that determination. All right, guys, that's it. If you have any questions, let me know in the comment section. Feel free to thumbs up, like, and subscribe if you haven't already. And I'll see you in the next video. God bless.